Welcome back, guys, to another sensational podcast with MYB. Today's session, guys, we're alive. We're breathing. We're breathing carbon dioxide. Grateful Lord for the small things. We might think it's small, but a lot of people on earth don't even have the privilege to experience the stuff that we have. So I'm saying, people, so always be appreciative, man. Appreciative for the stuff that you have. Don't be so concerned and be caught up of the stuff you don't have, because regardless, bro, human being was never meant to be satisfied. You know what I'm saying? Human being have this word we call curiosity. Curiosity is the root of all evil. You know what I'm saying? Money is not the root of all evil. Curiosity. You know what I'm saying, people? Because we're curious about something. We're curious. We're gonna discover it. We're gonna fuck around and find out, basically, right? So with that being said, people, today's session we're gonna talk about what the stock market versus the real estate, right? People ask me which one I pretty much prefer. The short answer is I prefer both. Like, cause I'm gonna tell you why I prefer both, but that's just the short, summary of it. Like, you can't have one without the other. You know what I'm saying? You know what I'm saying? Like, you need both. Having real estate is like having one shorty, like having one girl. You know what I'm saying? Yeah, she's a white girl, right? But then the stock market is like having you a Latino. You know what I'm saying? Or real estate is like having you a black chick, and then stock market is like having you an Asian hoe. Like, you need both. You know what I'm saying? Because if you think about it, right, all men like sneakers here, like guys who like sneakers, who like cars, right? They just don't have one car. They might just drive one car at a time, wear one shoe at a time, but they have the next shoe in the closet. You know what I'm saying? They take the time and they buy both shoes. They didn't just buy one shoe. They buy both shoes. And in reality, both is gonna go up in value regardless, right? The stocks come down, real estate come down. House go up, stocks go up. Like, both have its value, right? So today, like I said, we're gonna dive into one of the most debate topics in the money game: real estate versus stock. Which one is better? Everyone got an opinion. Everyone have an asshole, so it don't really matter, because check this out: your uncle, sires, or Sam, whatever you want to call it, buy real estate, right? Your friends swear by stocks. So like I said, people buy stocks, people buy real estate. Everyone have their preference, but the best case scenario, bro, is implemented in both. Because like I said, bro, right, understanding real estate, right? Real estate is the oldest wealth game in the book, right? Everyone really know when it comes to real estate. Every empire, every family, dynasty, it starts with land, right? Because why? Because land is real. It's tangible. You can touch it. You can control it, leverage it, pass it down, right? Real estate gives you four major advantages, right? It gives you that stable cash flow, right? If you own rental properties, tenants pay you every month, right? That's income that hits while you sleep, right? Same with stocks. At least with stocks, you can get the dividends with weekly dividends, monthly dividends, and yearly dividends. But the dividends may be a 2% dividends or 3%. But at least with the rental, it gives you like a 850, 1200, whatever your rent is, right? And also with rent, you gotta pay the maintenance fee back. So it's not really all sunshine and rainbow on the real estate side too. Maybe if you get like a lease to own, is maybe the best sunshine and rainbow, because you don't have to do all the tenants, you don't have to take care of the property, because they're leasing to own it. They want to live in it in the long time, right? Now, if they do pay off the home, that's when shit could really be sideways, because like I said, they want to pay off the home, right? So the land is appreciated, right? It appreciates over time. Property value goes up. You're making money just by holding the property, because like I said, every time I talk about real estate, I'm always saying this: land is no more land. Like, whatever land God created, that's it. It's no more land. So land is gonna always go up in value, because the economy is always expanding. And as long as the economy expanding, shit is gonna always go up, right? And the tax bracket, you can write off tax, depreciation, mortgage increase, deduction. The system reward ownership. You know what I'm saying? As long as you own it, low key, own it, control it, put in a corporation, wrap around an LLC, but don't really have your name on it. Have your name as the beneficiary, right? Because if you own it, that's where you can that tax coming. But like, if you don't own it, you put that whole in LLC, like I said, corporation, wrap that whole in some trust. You know what I'm saying? And you're the just damn beneficiary. You just the damn near beneficiary of your whole empire, bro. So you could even leverage the real estate, right? Leverage, pretty much, you can use other people's money. Put down 10%, control 100% of the asset. What the down payment, like for the down payment, you need a lot of credit, because you could even simply put down a deposit of $3,000 and the bank can give you 30,000. Like, if you have good credit, they would damn near work with you, right? But like I said, people, it's not all like sunshine and rainbow, right? So it's not all perfect when it comes to real estate, right? Upfront costs, maintenance, property tax, and tenants use. Like I said, the best form of real estate that I use, so I can't really speak what I didn't use. But after doing like my research, read a lot of books, been in the game a little while, so I know. Because like I said, lease to own is the best. Really, is the best one. Because like I said, you don't have to do no maintenance fee. Like no one is calling you to fix the plumbing in the pipe. If the plumbing break, that's not your responsibility. If the roof leak, that's not your responsibility. If the sink, nothing's your responsibility, right? But if you're renting it to college kids or you have units, then it's your responsibility because that's your job. Or you have to pay a maintenance to pretty much handle the property every month. You know what I'm saying? So you're pretty much giving away bread. But if you do a lease to own, like I said, is the best strategy ever. Three bedroom, 2 bath single family home, or 2 bedroom, 1 bath. Any single family home will work for your preference. And like I said, when you do lease to own now, they pay down a hefty deposit, right? They're different from the bank, especially if it's a peer-to-peer lender. You can get it from peer-to-peer lender, or if the person, like for example, if the person selling the house by themselves, you're not dealing with no agency, you're not dealing with no bank, you're just dealing with the person. You know what I'm saying? But like I said, personally, how I did it, I pretty much give them a hefty deposit, and the deposit they're not getting that back. It's out the window. As long as they don't buy the house, they're not getting that shit back. Same, and if they don't buy the house, you get to keep the house. You know what I'm saying, people? So it goes both ways in your favor. But if they do buy the house now, what happens when they do buy the house? Eventually pay off the home. That house is finished. It's no longer yours. You have to go out and get you another house and repeat the cycle. But if they don't buy the house, you can at least keep the deposit. So it's like a win. It's like a win-win situation, because even if they do buy the house, all you gotta do is go to the bank, maybe with $5,000 with your grid 750, 800 credit score or whatever, and they will hook you up with, like, you put down 5,000, they might give you 20,000. That's because you have good credit and you have what you're doing. It say your system work. So the bank will see your record and they know, all right, they're just gonna give you money regardless. And fun fact about borrowing, when you get so high in real estate now, you want to borrow a lot of money, so you too big to fail. You know what I'm saying? You don't want to borrow just maybe 100 million. If you borrow 100 million, you fail, bro. You fail. You're in debt. You have to file for bankruptcy, right? Now, if you happen to borrow 200, 500 million, right? Even maybe $1 billion, because if you can borrow that, right? And when you fail, nigga, you're not fail. We fail. You know what I'm saying? America fail, because now America are in debt. Even though they're already in debt, it's gonna be worse, because now you're too big to fail. Now they have to come and bail you out, right? So personally, like I said, lease to own is the best real estate strategy out there. If you want to do fix or flop, I probably will talk about the other types of real estate in another video. But like I said, lease to own is the simplicity one. It's just simple. It have all the pros and the cons. I pretty much break it down simple, but there's no really cons in lease to own. They might have 1 or 2 flaws there, but it's not drastic as the rest. You see what I'm saying, people? So we can cross over to one, understanding stocks, right? So the stock market is where you buy a piece of company, right? You don't really buy the whole shit. You could buy the whole share. You could buy a whole share. So for example, if you buy a piece of Apple, right? You can put in, you can just put in like damn near $10, $5, $1 on Robinhood. It allow you to put in $1, $2, $3, $4, $5, whatever, right? And then every week, every month, depends how the company go. Even Tesla right here, you see Tesla right here. If it's down right now, as long as you're in Tesla or any stocks, they're gonna pay you a weekly dividends, a monthly dividends, and a yearly dividends. Even though the stock drop in value, you're gonna still get the dividend. But like I said, the stock's dropping in value. So as long as the stock drop in value now, you lose the money, right? You're losing money, but eventually it's gonna rebound back up, right? Or what you guys can do is get like something called an option. Play the option. You guys can play the put on the calls. You guys can day trade. Or if you guys have like a lot of money you want to fuck around with, you guys could buy 100 shares of the company, and then you guys could do something called the wheel option, like a cover call. Could buy put spread, buy call spread, and do generate the dividends inside cash flow, right? So you could, as long as you buy it, and when the price drop, for this strategy to work, you have to buy a company that you like regardless. So when the stocks do drop, and also look at the delta, make sure the delta is like 30 to 70 gap, and then you'll be smooth. But like I said, or you can just buy a long leap option, like, because if you think about it, right, stocks is going to always go up in value, right? So knowing that little piece of information right there, stock is going to always go up in value. And for example, like the Apple and the Tesla, like these companies, like they stock prices like damn near $200, $300, right? So instead of buying the whole share now, you can just go on option and you can get you a leap option. Leap option means you can get it for a year anywhere, because the delta wouldn't expire. The day decay, you wouldn't get hit with day decay so hard. So normally what I do to it, so like I said, knowing the economy is gonna keep rising, I got 2027, 2028 calls, right? You can get it for maybe a little expensive, or you can maybe find a lucky one there for a cheap price and just let it sit there. So you're in a contract for 2026, 27, whatever, but that's like a leap option. Or if you think the economy is gonna go down, get you a long leap option put to. You know what I'm saying, people? So it's different ways. It's not just you could just buy, because when it comes to stocks, a lot of people only know about the S&P 500. Like that's all they know. All they know is invest in the S&P 500. Like that's all they was taught in finance. But bro, it's more beyond just S&P 500. Right? So the accessibilities, right? You can, like I said, you can start with $50, right? And one thing about stocks though, is easy to sell. Like all you gotta do now, but maybe back then you got to like call your broker and maybe take 2 to 3 days, bro. Robinhood, bro, you can just swipe the shit to the right or to the left and push a button, and then they might charge you maybe $1 or a couple cents to sell it, and that's pretty much it. You get the shit today. Then if you have a margin or cash account, if you have a margin, you can have the money there like instantly there, and you can deposit it that same day. If you have a cash account, you gotta wait till the next day for the money to hit your buy power. Then you have to withdraw it. But if you guys planning to do the cover call strategy, I would recommend you guys switch to margin, because they would want to see how you manage your margin than cash, because cash account let you trade 24/7, not 24/7, but as long as you have a shit ton of bread and buy power, you can trade damn near how many times you want to. But margin, it gives you like a limited access to trading. But at least with those margin, at least you got to be disciplined with your trade, and you got to be consistent. And one thing with the stock market too is liquidity. You know what I'm saying? A lot of liquidity in the stocks than in real estate. Real estate don't have that much liquidity, bro. Stock market every day, damn near someone getting liquidity. As I said, like if you don't understand liquidity, then you are liquidity. Same with real estate. If you don't understand appreciation, you're depreciation. Like bro, you can buy or sell in seconds, right? That's the freedom of damn near trading, right? And diversification, like in real estate. See, real estate diversification is just real estate. Unless you plan diversifying your portfolio in different countries, then that's fine. Like you have one real estate in the United States, one real estate in China, one real estate in Mexico, and so on. But if you have all your real estate in America, you shouldn't really diversify. It's in America, right? Same with stocks, right? You can't just have all the Apple, Tesla, S&P 500. Yes, all that stuff is diversified, but they're still in the technology bracket, and it's still in the United States. For example, right? If you get SPY 500, right? Then you get BABA. Then you get Caribbean stocks. You get Carnival. You get the airline. You know what I'm saying? So now your shit in China, Mexico, Italy. Like just don't just get all your portfolio in United States. Then you can get like the ETF and shit. Like what? Like do your research. Like I'm not gonna really tell you guys what stock to get, because I don't really care about you guys that much. Like I said, I'm doing this for me to look back at it and get better, and for my sons and daughters to look back at the video and be like, all right, I see what bro's saying. So like I said, don't just diversify your shit in one country. Look for abroad, because the fun fact about abroad now, when you could buy real estate abroad, they will grant you a passport. They grant you a passport, they grant you a bank, bro. You can't beat that, bro. So, but the downside with stocks now, it's just volatility, right? Stock will fall in a day. Like stock will fall 3 days straight. Real estate just probably gonna fall like once a while, like once maybe a year. Once if interest rate go high, it might fall like, but it won't keep falling every day. Stocks will fall every day, bro. Stocks will fall every day. That's why also you need to understand day trading as a side component of the investing. If you hear the stock market, you should know how to day trade, and not just day trade. Like understand the technical analytic, because you must understand like the market structure, the order block, the supply and demand zone, the market mechanics, like higher highs, lower lows. That's pretty much market structure. But bro, it's a lot of shit in it. But once you get it, you get it. And this is a skill that produce cash flow. Like you may not see the cash flow in like the first 3 years, but 1 month, 1 year could rebound your whole life, and next thing you know, you in Dubai, you in Paris, you in Mexico, you in China, you in Italy, you in Spain, you all over the world. You see me, people? So it depends how you implement your life. So why stocks are easy to enter, right? They have hard time to manage, or you guys can have a mutual fund, and then you could have someone manage the capital for you. For example, I have a hedge fund. I have a MYB Misunderstood Eagle Capital, right? So people give me the bread, and every month so how the company pay me dividends, I just pay them dividends. I pay for the first month. For example, let's say you give me $100 today. A month from now, I give you back $100. I give you $100, and that month go forward, I give you back dividends every month. It's not gonna be the same dividends, but it's gonna be like the 2% dividends, like 2% or 3%, because I'm not gonna guarantee you a 8% dividends every month. I'm not gonna guarantee you after, because at the end of the day, right, you're getting back your $100, or how much you give me, you're getting that back the next month, and then after that, you're getting like 50-50. Whatever I make, you get 50 for that, 50 for that, because my only goal is from the hedge fund when I'm running is just outperforming the stock market. Outperform the S&P 500, because a lot of hedge funds can't even outperform the stock market, bro. So like I said, bro, if you think about it, right, the lineup pretty much is what category, right? We got real estate, right? Real estate, rent, monthly, stocks, dividends. Real estate grows slowly, because you think about it, right? The categories is what? Cash flow, liquidity, risk, maintenance, startup costs, tax bracket, leverage, control, scalability. That's pretty much it. In real estate, monthly rent, you get a monthly rent. It's stocks, you get dividends. You know what I'm saying? A different quality to it, but at the end of the day, it don't really matter, because like I said, people, we play both games. Because if you think about it, and this right here is gonna pretty much separate you, right? You don't really jump into trading. Right? I mean, you don't really jump into real estate. I mean, you could, but personally, for the guys who have the bread, yeah, you could jump into real estate, because either your family had the money, or you just happen to have the money to go into real estate, which is fine. But mainly traders who jump into real estate, you begin your journey to trading, and you happen to hit big, right? You happen to become successful in trading. Not just hit big. No, I don't want you to hit big. I want you to go through the struggle, bro. Because you're not in this for just hitting a big win. No, you're in this to hit big every day, grind every day, get better every day. Do not quit, even though when you're on a downtrend. If you're losing for 6 months straight, so what? Trading is, you just gonna die. As long as you're on the path of trading, that's the right path in life. Like, trading is the only profession that gives you the freedom you really want deep down in your heart, in your soul, in your mind. When you can't sleep at night, that's the profession right there. Trading gives you that leverage. It gives you that way out. No other job give you the way out, right? So when you do make that money through trading, and when you have your stocks, your dividends paying you, and when you have like almost like 300K in your buy power just sitting there, instead of just sitting there, then you can go and take that money and put it into real estate. You see what I'm saying? So now you have your real estate there. Then when you get your tenants, you get all this paying you a monthly income. Then you could even put back from day trading, because you already have these companies paying you. I mean, these tenants paying you monthly income. Then you wouldn't even have, you might just trade once a week, twice a week. And with trading 2x7, I don't really, because people ask me if I do my day, if I post plays and shit. Yes, I do have that in my Discord, but I stopped that, because the reason why I stop it now is this, right? One thing is, mainly people do the Discords and the trade is to pretty much show other people how good they are in trading, right? And they have to maintain that, because they have a fan base. They have a fan base and people watching them. They want to know, bro, what's the play for the day, bro? What's the trade? So now you're on live taking a trade. Like, bro, you're taking a trade just because you want to take a trade to let other people see you're still a good trader. Like, bro, if you're trading, that's the worst thing you could do, bro. Because I don't see the need of you being a trader and you need other people to pay you money. Like, bro, what? Trading itself is already paying you money. Would you need other people paying to join your Discord, other people to pay to join a course? For what? That's why you are trading. That's why trading is doing that. Trading by itself, you push a button, and because when people join your course, right, you have to be more entwined and keep building a course of saying the same shit. For example, look at all those traders, bro, who make trading videos, right? All of those trading videos, if they post one today or yesterday, look back maybe 5 months from now, they post that same exact video and just maybe say 1 or 2 shit different. Trading is just the same shit over and 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 over. It's nothing really changing, especially with analytic. All is the same analytic. There's no people, right? So when you don't have a course, right, when you don't have no Discord, right, when you make your money through trading, you put that money into real estate, right? Not just real estate. You have your money in private equity. Now you become a peer-to-peer lender. Now you're lending people money. Now you're giving people money to work for you, because you don't really have to be the smartest person in the room. You can pay someone to be the smartest in the room. People, you could pay someone to damn near be the smartest in the room. You don't really need them to be the smartest in the room, because think about it now, right? If you're the smartest in the room, you're in the wrong room. But if you're the stupidest person in the room, then you're in the right room. Because think about it now, people, right? We're in this game for the longevity of time. Like I always say, people, we're not in this game to get rich. Like right now, you see how that stocks came up right there. Rivian was down. I took a call on I put on Rivian for $13. I'm up like $38 on it right now. So I might sell it, or I might hold it for a couple of months. By the time I end this video, I'm ending. So like I said, people, stocks, for example, how I can sell the stocks right now in real estate, you can sell it, but then you have to wait maybe like a month or two to get it closed and all type of distribution with it. So like I can see, people, right? Everything have is preference. Everything has a different. Whatever you really do with it is up to you, because at the end of the day, bro, everything in real estate work. Everything in real estate work. Everything in the stock market work, right? Because how you use it comes down to that, right? How you use it to get better, it's up to you, right? So with that being said, people, mind your business.